Good evening and welcome to the FITT Show. Financial information for today and tomorrow. I'm Bobby Penza.
And I'm Thomas Doty.
And we are the FITT Show. Financial information for today and tomorrow, helping our people get their finances in shape. How are you doing today, Dope?
Man, I am happy to be alive.
Yeah, well, it's a good thing to be. Glad you are, because I wouldn't be able to see you if we didn't. But I think they need financial planning in heaven too, so it wouldn't be such a bad deal. So dope, man. Last week we talked about common ways people waste money. We hope that was helpful for our folks out there, because a lot of people are really jacking up their finances. But try to provide you with as much information as we can, you all. There's no skin in the game for us. In other words, we're not trying to make no money, but we definitely do have ulterior motive. We want you to really learn how to maximize your earnings and your wealth so that you can end up living a better life and hopefully be able to pass it on to your kids and other people so that they too can live a better life, because things are changing. Even though it seems so much chaos out there these days, the good news is, man, if you got some information and you take the time, the energy, and the effort, you can actually really manage your funds so that you can have a very good, stress-free financial life. And that's what our hopes is, that what we're trying to do on this show. You know, we're trying to help you so that you will be able to, be inclined to better position yourself in the financial mainstream in America. Because we know there's a lot going on, but ain't nothing happening, though. Don't get caught up, y'all, into all of the hype, and just get your focus, get your plan together. But just want to remind you, like, we would love for you all to make sure that you place comments into the box, because that way we reach exponentially way more people. But just don't put comments. I mean, we're not just asking you to put comments for comments. I mean, it's good to hear your remarks, but if you have any opinions on what we're talking about or questions on what we're talking about, please put them in the comment box, and always click on the like button and the heart, please. That also gives us traction. So that's very important. Also, so with done with housekeeping items, dope. Like I said, last week we talked about, ways that people waste money. But this week we want to talk about, do you need a financial advisor? Now, some time ago, we talked about, how to choose a financial advisor. But this is different. This is, do you need a financial advisor? I know a lot of my friends that be on this show, they listen to us, and some of the information they get, some of it they don't get, but a financial advisor might help you. It might be for you, may not be. But we're going to talk about, some of the things for you to determine whether you need one or not. But we're going to get to that in a minute. We're going to start off at the top of the show, everybody's top topic, and that is the stock market, though. Now, as always, though, with you, we got to cross our fingers and hope you give us some good news in the stock market with our 401ks and our stocks.
Well, it's been good. The market just closed its fourth consecutive positive month. So that's always a good thing. We've had 4 straight months of positive, yeah. And it's funny when you look at what's going on this past week. It looks like not much has happened, but there has been all kinds of volatility within the week. The Dow is basically flat. Nasdaq's up slightly. Microsoft, everything's pretty much flat. Nvidia continues to roll, and Pfizer even took a step down. I keep thinking it can't get any worse, but it keeps getting worse. But if you look within the week, there's been a lot of up and downs, and the inflation information came out today, and it was as expected, but it was still a tad higher than costs had been going up. So that's always room for alarm. And a March rate cut is pretty much off the table. So now the next decision will be, will the Fed cut the rate at the meeting after the March meeting? So we'll see how that goes. But a lot of volatility within the month, but everything is going pretty good right now.
Well, another good sign today was the debt ceiling was getting ready to expire tomorrow, and they extended again. Thank God, temporarily, but they extended it again because that could have sent the stock market in a tilt. So thank God for that. So
yeah, we don't need that. That's for sure.
Right. So that was good. They took that off the table too. So that was good news, other than the Supreme Court and Donald Trump. But that's okay. That's a political thing. But I was wondering, was that going to affect the market? You never know what affects the stock market these days. But what I'm trying to say, commodities are up too, though. Gold is definitely up, and so is silver. So it seems like all the boats are floating. Now let's get to one of our younger people's favorite market. Cryptocurrency is rolling, though. It's up 309 billion, the market cap, right? It's over $2 trillion the market cap. Bitcoin went from $51,297 to $61,180. That's $9,883, almost $10,000 from last week, though. That's a 19% jump. So if you were in there, your money would have grew, whatever you put in there would have grew over anywhere an average of 20%. Ethereum is up $371. Cryptocurrency, that's 12%. And Solana is up 24%. And look at Dogecoin. Dogecoin went from number 12 up to number 10, and it had a 50% return. So in those top 10, if you were in those top 10 cryptocurrencies, if you were in there, you definitely would have made out considerably. Me and Dote always talk about the long play, the long term, and here it goes. This is evidence for the naysayers when it was all the way down to $16,000 of Bitcoin. It's up to $61,000, Dote. Wow.
That's
but it just
crazy.
goes to show you, we talk about how volatile it is, and we also talk about the long play. Be in it for the long play and don't just panic. Most people want that instant gratification. They try, most young people like being in the crypto because of the instant gratification, and that's not the case. I know a lot of young guys understand about the long play, and they do the day play too, and the short spread. So that's good news, though. Yeah, cryptocurrency. I mean, almost $10,000 a Bitcoin. Wow, I know a lot of people are doing well, and you and me are one of them. So, Dope, let's get into our topic of conversation today.
Yes, and Bob, it's really interesting because a lot of people don't have financial advisors, and there's a bunch of reasons why. And if you think about it, it's a good place to start if you don't have the time to invest in all the multiple decisions that need to be made. And if you were to compare how you handle your financial situation to the effort you would probably put in to buy a car, for example, you wouldn't just go out and buy a car that somebody you like to have. You may, but you probably wouldn't. You probably want to get something that fits your own personal situation. You would look at the cost, you would look at the maintenance, you look at the insurance, you look into everything involved in buying that car, the fuel economy. You probably would check several dealers if you're really being diligent about making a good purchase. And so you think about all the effort, excuse me, all the effort you put into purchasing an asset that at most is going to have a 10-year life and end up being a bunch of junk. And the day you buy it, it's going to be worth less and it'll continue to decline over its life. But you think about a financial advisor who theoretically should help you increase your wealth and service other parts of your life. And it's really kind of interesting when you look at who has a financial advisor and who doesn't. A lot of people don't because they're worried about the cost and they think that's something that only rich people have and that they really can't afford it, and they don't even think about it. But you really got to ask yourself, will that person help me get on my path to building wealth, help keep me on my path to building wealth, or supply some knowledge that I don't have myself or I don't have the time to try to get?
Yeah. So it's I know, like I say, it's tricky though, because a lot of people, especially Black people, a lot of time people don't trust people with their money. That's one of the things. But when it comes to managing money, you don't want anyone messing it up, and I get it. But that also includes you. There may come a time where you need to call and reinforcements and hire a financial advisor, especially when you're making big decisions with your money. But it's important than ever to have a solid financial plan in place. In fact, among those who work with financial advisors, 84% said that doing so gave them a greater sense of comfort about their finances during the COVID pandemic. And that was according to Edward Jones survey that they did. Now, while not everyone needs a financial advisor, we get that, but many people will benefit from personalized advice to help them build a strong financial future. Now, you don't need to have a lot of wealth, like Doe said, to take advantage of a financial advisor. But remember, there are many different types of financial advisors, and we're going to talk about some of those tonight, like CFP, Certified Financial Planners. Well, now they got robo advisors, which is if you cool with technologies, they got robo advisors, that like AI, and for smaller portfolios, and not just smaller portfolios, but not as complicated, and wealth managers, and even there are financial coaches out there, just to name a few. But we just want to talk about, for you, listen to this today to see if you might, you might want to consider a financial advisor or not.
Yeah, and you think about people are kind of not really interested in getting a financial advisor. And it's really kind of crazy because if you look at the numbers, only like 30% of people have financial advisors, which is really baffling to me that only 3 in 10 people are getting financial help. And even if you assume another 20 or 30% are financially astute enough to go at it on their own, there's still a lot of people who aren't getting any help at all. And of those who have a financial advisor, the vast majority of those got a financial advisor after a specific event, like they got married or divorced, or they inherited some money. And the sad part is 12% of the people who got financial advisors waited until they retired to actually get a financial advisor, which is really scary because you don't know how much money they could have lost in that time. Now, there's a reason for that confusion and why people might not be as excited about it. And one of the big ones is that the profession is kind of confusing. There's all kind of designations, and it's not required that you have to be a fiduciary, and And all that fiduciary responsibility means is that they have to work towards what's best for you, not what gives them the highest return, but what's best for you. And so the industry hasn't helped because there's so many different designations. You heard of a chartered financial planner, a certified financial planner. And then you have people who just throw up a shingle and give advice, and people listen to them. And so that's one of the things you got to make sure you know that you're dealing with somebody who's working on your behalf. And so selecting advisor, it doesn't have to be that confusing or that difficult. There's a lot of guides for choosing one. We're going to tell you about a couple of places that you can look. You just, like we keep telling you, you have to take the time to understand how they're going to be compensated. You have to understand what designations or certifications that this person have, because they're all very, very important in picking a financial advisor. So the real first step is to think through what you're looking for, try to figure out what your goals are, what things you need from an advisor, what things that you may have a pretty good handle on, what things you may need help with. And then you're ready to go out and find an advisor.
And when last we talked, it's been over a year that we talked about, how to choose a financial advisor. And we talked about questions that you got them, but these are questions that you need to ask yourself before you look for a financial advisor. Are you seeking help with your whole financial life or just your investment portfolio? There's a big difference because there's a key separation among financial advisors is the focus. Many financial advisors, also called investment advisors or wealth managers, devote a lifetime of energy to managing portfolios, determining asset allocation, diversification, selecting investments, and so forth. In fact, they may be the one and only thing they handle for you is just your investment portfolio. But some may tackle your non-portfolio aspects of your financial life, but they might do so just sparingly and very lightly. They might not go deeply with that. So you need to determine, what you want the financial advisor to do. Now, another big contingent of advisors, or as we call, are financial planners. Now, financial planners, they concern themselves with the holistic financial planning, like setting and quantifying financial goals, paying down debt, determining insurance needs, and investing appropriately for college or retirement, among other tasks. Now, financial planners know investments too, but investment selection and portfolio monitors aren't all that they do, different than wealth managers, or asset managers. These distinctions may seem obvious to people inside the investment industry, but many consumers aren't aware of them. You might think of financial planning as interchangeable with an investment manager and advice, because that is a difference. The financial planner looks at the whole plan, and obviously the investment manager just looks at your assets. But it's true that the lines between the professions have grown clearer and blearer in the past few years. Now, investment advisors are increasingly focused on providing holistic financial planning, as some consumers consider the investment advice piece to be more or less a commodity and are seeking broad advice. It is also true that investors sometimes think that they have portfolio emergency when in fact their investments aren't the main thing that ails their financial plan. So if you just have an investment advisor, it might not just be your stocks or other things that is sort of giving you problems with your financial plan and meeting your goals. So consider that.
Yeah, and if you're seeking like holistic planning advice, then a financial planner is appropriate just to give you a broad-based guidance on your investment portfolio. A lot of times they'll take a look at what you have and where you invest it and see if it makes sense. And of course, they're going to try to get your business, but obviously they're going to. But some of them will do this service free just to give you a portfolio review, just to see if things are pointing in the right direction. Your charge is to make sure this person have some sort of certification, either a certified financial planner or a chartered financial consultant designation, in order to ensure that you're getting somebody who's trained and knows what they're doing. And some are fiduciaries and some are not. So make sure you understand whether they are or not before you hire them to work for you, and determine if that's important to you, that they're going to be working for you, or actually making decisions that have your best interests at heart.
Just want to take a brief, look off this really quick, but I want to address it right now before I forget. But Modestine asked the question, have we talked about digital currency before? And I told her that we have. And then she wanted to say, cool, thank you. And we can talk about it again. We are going to cover some subjects that we've done in the past. Some people went on the show when we did some of those, and it doesn't hurt to rehash some of that. And then Garnett said, I asked because I read about Executive Order 14067. I don't know what that law, that signed in law, and I think what that is, though, is that, you know what that is, I think that's the ETFs, that a cryptocurrency now can be used in ETFs. Right. That's right. But put in the comment box, that's what you're talking about, Modestine, 14067. But just want to address that real quick. So back to the main topic. Now, another thing, are you seeking advice on a few specific issues, or do you need help with your whole plan? Now, do you need one time, or do you need periodic help or ongoing assistance? Now, once you determine that, whether you're looking for investment advice or financial planning advice, the next step is consider what specific items you need help with. Now, decide if you're seeking advice for a few issues or problem spot in your plan, or if you expect to need ongoing assistance, because different needs involved with that. Now, knowing whether your needs are surgical or more encompassing can help you be more efficient consumer with advisory resources, and can save you money, actually, and time. Now, if you're seeking advice on just a few issues, if your needs are focused, for example, you like to review say the viability of your retirement assets, your 401k or 457 plan, given your anticipated spending, but then you'll be set for the next 5 or so years, you will want to seek an advisor who's willing to work with you on a per project basis. The financial planners are more likely to do hourly or per engagement billings that investment advisors do. And normally their hourly rates for financial planners often range from $200 to $400 an hour.
Now, if you're seeking ongoing or broad-based financial help, then you may pay a recurrent fee, and it could be annually, it could be quarterly, and that may be better for you than paying just for a specific service. Like you might just want to pay just to get a review and some advice on where you should be, or on particular investments. You may want to pay on an ongoing basis. And the way that usually works is that the more money you have invested, the lower your rate will be. And so you need to make sure you understand that, and you're fully aware of how you're being charged. And most of them will levy their fees as a percentage of your assets. So if you have, say, 500,000, they may charge 1% of that 500,000. Okay. Each year, they may break it up into quarterly, or they may just charge you annually. And a lot of investment advisors and financial advisors charge in this way. And 1 to 2% is usually what they charge, but typically once you get over $1 million, it usually gets under 1%. Another model that's gaining a lot of popularity is it's a subscription model where you pay your advisor on a monthly or annual dollar-based fee rather than a percentage of your assets. So you're just paying, it might cost you $1,000 a year, and you can get as much or as little advice as you want for that amount. So make sure you understand how you're being charged and make sure that fits with what you're trying to do if you decide to get a financial advisor.
Yeah, that's good. Hey, Modestine just hit us back with, she said she understands that the 14067 has to do with digital currency. And yeah, Modestine, that was a bill that they allowing cryptocurrency to be put into what they call ETFs, electronic trading products like ETFs, electronic trading funds, which are like mutual funds. So yes, they passed a law that can be done. So just want to let you know that that is what that is about. And then, though, for another sidebar, Modestine asks, Dodie, who are those handsome little ones behind you?
Those are my two grandboys. Those are my hearts. They are Xander and Sebastian. And
Yeah,
they're
they do look cute behind.
5 and
They,
8.
they do look cute behind there. The next one is, do you wish to be hands off or hands on? In a related vein, ask yourself how much of your role you like to play in managing your finances going forward. Do you want to be a part of the planning process and handle certain parts of your financial plan yourself, or would you like to delegate most of the decision making? If you're willing to handle certain aspects of your plan on your own, obviously there's more work you're willing to do yourself, and the more you should be able to save off the financial advisor fees that you pay. Now, investors who would like to do at least some of the heavy lifting for their plans should consider paying an advisor on an hourly or per project basis rather than an all-in fee for encompassing services. Now, if you like to delegate, this setup can make sense for very busy people who simply don't have the time or the inclination to participate in the planning or investment management process. That is also something to consider for older investors who are concerned about the possibility of cognitive decline in the future or its impact on their ability to manage their own finances and investment portfolios. So paying an advisor a percentage of assets annually or hiring one on a retainer basis can make sense for people who want to delegate those services.
Yeah, and you got to look at how comfortable you are with technology. And a lot of advisors still meet face to face, but I mean, the pandemic has kind of proved that you don't need to be face to face to get things done. So nowadays, a lot of it is done over the video conferences and phone calls. And there's a big portion of people who use robo-advisors, and they typically use computer algorithms to calculate where you should be invested, and it'll pick mutual funds for you. In some cases, it'll pick stocks for you. And even most human advisors also use some sort of software programs to figure out what their clients' plans should be. And so all of them are using technology to facilitate interactions with their clients. And they might use portals to share information. They like when I use Fidelity, they do a lot of webinars. They have a lot of ways you can go in and review your portfolio's performance. And they provide you with a lot of educational things through their website. And so if you're comfortable with technology, you may be able to lower your management fee by using some type of technology-driven advice, such as a robo-advisor. And there's a bunch of them out there that are working pretty well. And some financial planners use a hybrid model where it's part robo and part their own customized thinking. And they might outsource the investment management piece to a low-cost robo-advisor. So if cost cutting isn't your main goal, and technology as a video conference can enable you to meet with advisors who specialize in a specific area, such as financial planning for small business owners, or they don't live in your same area, you can work with them. But if you're old school and you want to be face to face, then you got to focus your search in your particular area. And we'll give you some websites where you can actually find some financial planners who do work for fees.
Just right quick, I have a question for everybody here since Modestine brought it up. you all would like for us to cover digital currency, please put it in the inbox. You missed it, or if you want to refresh a course, or if you just, like I said, you want to know more about digital currency, please put it in the box so we know if that's something that we can do again sooner than later. Thank you.
Hey,
No.
hey, Bob, excuse me. But since we've regressed, I wanted to mention this before I forget. There's a new scam, and I keep reminding you of these because I don't want to see anybody get caught with this. But there's actually
new ones every day.
There's a new one where they will call you and say they're from the police, and the phone number will actually say it's from the police, a specific precinct that may be in your area. And it happened to this person. And fortunately, she called her lawyer, who then called the actual police station, and they said, no, there's nothing going on with this person. So if anybody calls you and you feel you have any inkling that it's not legit, just hang up and call a number that you know is a good number. And even if it's the police, you will not get in trouble for that. They're not hardly going to call you and tell you that you have warrants or something like that. So we've said this before, and I'll say it again. If you don't know who's calling you, don't answer the phone, because it's probably a scam of some sort.
Yes.
Okay, sorry.
No.
I just didn't want to forget that.
No, that's good. And I'm glad that you said that, though, because there's another scam where a kid will call you up and it'll sound like your kids. And it is your kids. But what you can do, you can ignore them and tell them it was a scam and you won't have to pay it. No, I'm just kidding. I'm just kidding. So moving right along. That's important, though, because it's so weird. Every day there's a new scam coming out, man. That's why we try to keep you up on them, y'all. But look, this is a thing. You need to really ask yourself, do you have a specific investment philosophy that you would like to see the advisor employ? Now, are you a believer in the benefits that can occur, on index funds or exchange traded funds or mutual funds, thanks to their own low cost and tax efficiency? Or do you like to employ actively managed funds, or, because we talked about that before, passively managed funds, which are ETFs, electronic traded funds, or managed funds, actively managed funds from the financial advisors, like funds, or they manage your individual stock in the hope of them beating the market. Now, do you want your advisor to be strategic in managing your asset allocation? That is like long-term, hands-off, or more tactical strategy. These are things you need to consider and think about and think through your investment beliefs, and articulating to a prospective advisor is a crucial step, especially if you're leaning on an advisor for ongoing investment guiding. Now, if you have a specific investment philosophy you'd like to see the advisor employ, if, for instance, you read the Morning Star, like me and Doe, we read Kiplinger, it's a good bet that you have developed a set of investment beliefs that you like to see embedded in your plan. These are the kind of things you need to consider when you're talking to a financial advisor. Even if you're delegating a specific decision-making to the advisor, be sure that there is any prospective advisors of their own investment approach, because it's not just what they want you to do. If you're open to allowing the investment advisor to employ their own strategy, even if you don't have a strong view of how you like your assets to be managed, it's still important to ask some questions about strategy. Is the advisor clear? Is the advisor transparent about their approach? Does the advisor employ low-cost funds or more expensive ones? Do they do churning, what they call just getting you in and out of funds or stocks just to add up to commissions? That's called churning. How much attention does the advisor pay to tax efficiency? Taking the time to understand your advisor's strategy can help you stick with the program through varying market conditions.
And I want to be sure you guys understand this, what a fiduciary is. By definition, it's an individual who is ethically bound to act in another person's best interest. And this obligations help limit conflict of interest concerns and can help make an advisor's advice more trustworthy. And so if you're working with an advisor who is not a fiduciary and constantly pushes investment products on you, then they could be receiving a commission and they're selling you things that puts money in their pocket as opposed to what's best for you. So if you're experiencing this, you need to make sure that you understand how you're being charged. And if you find out that you are that your guy is churning, that's what that's called, as Bob said, then you might need to look for another financial advisor if you have one, or make sure you don't get one who is not a fiduciary. It's really important to understand that.
Well, though we got several people who say yes, want to know more about digital currency. So we need to, do an episode on that. Several people do want to know that. So thank you all. That's good to know. The next thing is, do they use your input? Now, people hire financial advisors to tap into the advisor's knowledge and expertise. But that doesn't mean a financial advisor should assume free reign over your investments. They should absolutely be responsive to your feedback. Like Doe said, fiduciary advisors must prioritize the needs of their clients above their own, especially if they're legally tied, meaning that they have a fiduciary responsibility over your investments. This means that they are supposed to recommend investments and products based solely on your needs, not what will net them the greatest commission, referral, kickbacks, or fees.
And let's talk a minute about what a good financial advisor's characteristics they would have. And one of the most important is that they must be easy to reach. And they're going to have a steady base of clients. And that's one of the things we recommend is try to find somebody who you think their financial portfolio is similar to yours, or their goals are similar to yours, and you may ask for their advice on who they use. And so if they're good, they're probably going to be busy, and so they may not be able to get back to you as quick as you like. But there should be regularly scheduled calls, maybe quarterly. I speak to my guy quarterly, but he's always available if ever I have a question. And so just make sure you can reach them, and they are open to, if you want to make changes, and they'll call you just to talk if you're unsettled. Now, the thing you got to understand is you can't call every time. I won't say you can't do whatever you want, obviously. You shouldn't call every time there's a big market drop, because that's going to happen. You got to understand how the market works, that you're going to have ups, you're going to have downs. But if you need to make a large philosophical change, or you decide the market has reached a point where you want to do something different, then you should be able to reach out and talk to your advisor, and he shouldn't be that hard to get in touch with.
And though you must understand the details. Whether you're investing $5,000 or $500,000, you want to know how well your investments are doing. If your advisor is your advisor's not forthcoming about the status of your assets, you should be suspicious as to why they're so tight-lipped. Likewise, if they're giving you numbers without explaining what they all means, that can be equally problematic. So make sure that you at least understand the details of your own plan.
And realize a good financial advisor is going to take the time to get to know your particular situation. And a lot of people don't like folks all up in their business. But in order for him to do your job to the best of his ability, he needs to understand what your situation is. You need to know your income, your family size, your goals, your risk tolerance, your current assets, your current liabilities, what big spending plans you have. He needs to know all those things about you so he can design a a plan that's going to help you meet your goals. And you have to make sure you explain all that to him. And some of this you have to understand yourself. You have to know what your risk tolerance is. You have to understand how much risk you're willing to take, and pass that on to him so he can make a decision based on what you tell him. So don't worry about him getting all up in your business. He needs to be. And if he's not, then he's probably not doing a good job.
Yeah, true that though. That is that is very true. Now, how to find an advisor. Now, FINRA, which is the Financial Industry Regulatory Agency, it's FINRA, FINRA.org. You can search that, and it's a government organization, and they notice it's a .org, not even .gov, it's .org, and you can search for registered financial advisors, and they register with them. If they register with FINRA, that means they have a fiduciary responsibility. And or if someone is telling you about someone, you can go out there and search their name on FINRA for financial advisors and see if they are registered. So that's definitely the place you can find a financial advisor. Or if somebody tells you about them, you can go out there and find out if they're registered under the Financial Industry Regulatory Authority.
Okay, now this is one of those situations where it's going to seem like I'm talking out about both sides of my mouth. Because we looked at a Vanguard study that took a hypothetical $100,000 investment, and the study said that investment would grow to over $190,000 under the care of a financial advisor, whereas if it was self-managed, it would only grow to $110,000. And this hypothetical study assumed 5% net return and a 3% net annual value add for the professional financial advice. Now, I say that, and a lot of times you'll hear, and I know we've said in one of our previous shows that there's no empirical evidence that using a financial advisor guarantees higher returns. But that's just one small part of the equation, is the return. That's a big part, I grant you that, but there's other ways a good financial advisor is going to help you save money. It could be through tax planning. It could be through portfolio allocation, of making sure you have the right tax advantaged assets where they should be, as opposed to, for example, you wouldn't want to have real risky things in something that you have to pay taxes on. Theoretically, you want to have the things that are high risk, which also yield high returns, in something that's tax sheltered. And so those are the things that an advisor can help your overall portfolio grow, as opposed to just flatly looking at what your returns are. If you look at your whole financial picture, just think about how many shows we've done. I think we're up to like 138, 139, Bob.
139.
Yeah, that's and very few of them have been repeats, but that's a lot of topics, a lot of information. And that's one of the points we're trying to get you to understand of how complex having money can be. I keep going back to Puff Daddy's song, "More Money." I shouldn't say him. He's kind of persona non grata right now. But more money, more problems. And it is true. The more money you get, the more effort you have to put into managing that money to maximize what you have. If you don't put time into it, you can lose it to taxes. You can lose it to market adjustments. There's a lot of ways you can use it if you aren't being savvy, you aren't taking the time to understand things, you aren't taking the time to reallocate. If you have a specific risk level and the market has a run up, then we will tell you that you should readjust your portfolio to keep the risk in the same proportion that you want it to be. If you have a 70% risk tolerance, which means 100% means you're 100% invested in stocks. 70%, which is about where I am, is a little more conservative. And you compare that to 50% to where Bob probably is, which is much more conservative. And so if you have a market run up, like these last 4 months, we've seen the market go up. Well, you need to look at your portfolio and say maybe you need to take something out of the market and putting in something a little conservative just to keep your risk portfolio where you would like it to be. And those are the things that a financial advisor can help you do. They can help you do things like estate planning. There's just a lot of value they can add other than just the pure return. And you got to ask yourself, do I need that help? Am I going to put the time in myself? And again, if you're going to put the time in yourself and do all the work and stay on top of things, hey, more power to you, and you will save that 1 to 2% a year. But if you're not, there's a very good chance you could lose way more than that. Something as simple as making sure your money's in a high yield account. Those are the things, high yield savings account. Those are the things that an advisor should help you do. So I'm not talking on both sides of my mouth when I give you this example of a fee-based or a financial advisor doing better than self-managed. And of course, there's 150 million examples that could go either way within that spectrum of no advisor to an advisor and everything in between. But you have to ask yourself, how much time are you going to commit? You have to understand how complex it becomes as you get older, how complex it becomes with the tax situation, how complex it becomes with your retirement situation, and all the things that go on that play a part in that. It's not simple. It truly is not.
And though some people worry about the risk of, getting advice or the risk of getting the market, but we always say this: there's a risk in doing nothing. There's a risk in doing nothing, so that can cost you too. And don't I always say this trick question to the young people when I'm teaching education. I said, okay, what would you rather have? Problems of money or problems of no money? Which is better? And I think I choose problems with money every time over problems of no money. But one of the reasons why we having this show today, you all, because, and I want to remind people that even if you have, an employee plan, like a 401k plan, a retirement plan, they have advisors, especially I know specifically at the FDIC, they have advisors for the T-Rowe price because FDIC have two 401k plans, a thrift, where they have the T-Rowe price, and at T-Rowe price, you can call them up, FDIC people, and they'll give you financial advice. They'll give you a financial advisor for free, by the way, especially if you're close to retirement at no cost. And I mean, I think, to not use that, having a free access to that is a waste, because I used it, just to even bounce off to see that if I was doing some of the right things. So, and a lot of companies have the same thing, check with your employee plans. They provide you, financial advisors for free, or sometimes at no cost. Most I'm finding they give them to you for free. They give you that advice for free. And me and Doe, we always say this ourselves. We profess that, tell you that we tell, first thing we tell you, we don't claim to know it all, because there's so much out there, like Doe said before, to know. So that's why it's good to think about having a financial advisor that can help you through this jungle of finances. So
Hey, you know how I love sayings. I heard a good one this week, and it was from a football coach, and it was actually Lou Saban, or Nick Saban. I'm sorry, I'm old enough to remember his dad, but he said you'll either have discipline or you'll have disappointment. And I think about that in terms of managing your money and how disciplined you have to be to build wealth. And that's not spending, that's saving. But a big part of it is Bob's favorite line, knowledge is power, and action is even more. But getting knowledge. You have to be disciplined about understanding what's going on with your money. And I'm convinced that you can't know everything. And that's why I have a financial advisor for a good part of my money, because there's just is too complicated for me to understand. And the thing that I'd like you guys to think about is make sure, if you get a chance, you are always talking to somebody who is where the next stage of your life is going to be. For example, if you're in your 50s, make sure you're talking to somebody who's in their 60s to get a feel for what's coming ahead. Because a lot of us, a lot of people I know, a lot of people that I think listen to our show, are first generation folks with money. And so we don't know what it's like to be our next age and have money. We have no idea. Now, my kids will be in a much better position than I have ever been in, because they have me to have given them knowledge about what to expect and what things to look out for and things of that sort. And so it's up to you to try to, because things change, things come up, things happen. And a lot of times we don't know because they've never been discussed in our household. And so try to keep some contact with people who, again, are where you are, but also people who are where you're going to be in the next stage of your life.
So with that, let's go to the summary and takeaways, because as always, we dropped a lot of knowledge tonight, and we like to recap it to make sure that you all would get this. So I'll start it off, Dope. Understand your plan, okay? This is key in getting a financial advisor, because you need to know the details of your plan, your goals, your risk level, and your overall financial plan. You need to at least, have some knowledge of it, so when you could talk to a financial advisor, you can be able to articulate what you're trying to do. So it's good to know and make sure you understand your plan.
Yeah, know how you're going to be charged. You don't want to end up seeing a credit to your account and you don't know why. Make sure you understand exactly the fee structure that's being used, when you're going to be charged. And that's important if you decide to switch. If it's the first day of the next quarter and you decide to move your money, you don't want to do it the day after they charge you. So make sure you know how you're being charged.
The next one is review the advisor's performance. Now, let me tell you what that means. That means, how do they measure themselves? So if you had a financial advisor and then at the end of the year, ask them, how do they measure themselves, their performance against, say, the S&P 500, the NASDAQ, how they're tracking themselves, and you need to review and see if they're keeping pace with the market, or could you have done better yourself? So it's very important to make sure you have them measure their performance to see if they are being effective with your money.
And so the final takeaway, do you need a financial advisor? That's a question that you need to ask yourself, and think about where you're going, think about what you're trying to do, think about how much time you're going to spend understanding all the things you need to know. Try to understand what your shortcomings are as far as knowledge, may it be taxes, or it could be estate planning, and see if an advisor can help you fill in those spots. And so think about the things we've talked about. Ask yourself if you need an advisor, and if you do, go through the steps. Hopefully we've given you some steps to take to make sure you can go out and pick somebody who's going to help you build your money.
Yes, yes, yes. So with that, you all, we like to do how we end this show. We like to do root calls. We like to thank everybody that actually come on and take the time to listen to us. And remember, make sure you share this. Facebook Live, you can share. And on YouTube, you can subscribe and have other people subscribe to this also. Just want to shout out to the first one on today was my sister Gloria. And then, hello, Nolia, my wonderful sister Nolia Melton. And Linda didn't make it on today, y'all. She probably fell asleep. Rodney L. Madison Sr. TheNoteExperience.com. If you're looking for alternative investment strategy, look at holding mortgage notes. Go out there on NoteExperience.com and check Rodney out. He's on every week. Thank you so much for always attending, Rodney. Modestine down there in South Kakalaki. We're going to come and we're going to do something on digital currency, Modestine. So thank you for tuning in. Joanne, what's up, Joanne Skinner? And the wonderful and the marvelous Garnett Nickett. How are you, Garnett? And Tracy, hey, Tracy Denise Jackson, FDIC's finest and the accounting world's queen of accounting. What's up? So glad to have y'all. Thank y'all for tuning in. And as always, we look forward to seeing you next week, which will be our 140th show. Good Lord have mercy, though. Oh, wait a minute. We got Danita Walker on here. What's up, Danita? We got some new faces popping up here. Hey, Danita, how you doing? So glad to see you, dearest. Hope all is well. Thank everybody. Oh, and look, and bringing up the rear, though, wishing us a great show, the wonderful Mrs. Now Doty. What's up, Now? Thanks for tuning in, girl. What's up, Danita? So thank everybody for tuning in. We look forward next week to have a nice bona fide topic and keep those subjects coming in that you'd like for us to talk about. Once again, much is power, but it's even more action when you need it. And Dote, I want to use this last statement because we like sayings, right? And it's my man Butch McAdams, who has a radio show here in the DC metropolitan area, and he goes off by saying this. He said, life is really tough, but it's even tougher if you're stupid. So look, y'all have a great day, and we look forward to seeing you next week. Peace.